Hi guys, welcome back to the channel, Subsistence Traveling. I'm your host Jay. Today we're talking about 5 Chinese financial stocks to buy now. And most of these companies are based in China. However, a few of them are not, but they do have a significant amount of business within China. Okay, and I think this is one of the biggest investment themes of our period right now. We're experiencing the financialization of the Chinese economy, and I think, people should pay attention and try to take part into this. All right, so the disclaimer, I'm just going to give you a moment to check out the disclaimer. And I encourage that we stay connected. Follow me on Twitter at SubsistenceTRA1. Support Patreon, Subsistence Traveling. I will always also have links below. All right, so here's the case for Chinese financials. Right now, you're going to witness the financialization of the Chinese economy. All right, so a quick comparison. 52% of all Americans own stocks. However, in China, that number is only 7%. Okay. And you have to understand it's because there are two different kinds of economies. Um, you see that the majority of Americans keep their wealth in equities in the stock market. In China, most of the wealth is in business, in the form of entrepreneurship, or in real estate. That's the majority of their wealth. Okay, and now that you're gonna see China move from an export driven manufacturing based economy, uh, they're going to get more financialized. Their economy will definitely get more financialized, and this is one of the biggest themes right now. The broad Chinese market is at fair value. It's not as expensive as the US market. And also, the companies have much less debt, than Western or developed world companies. Last but not least, China is the rising power, rising influence economically, politically, and they also have a rising middle class. And, that's how you grow an economy, by building that middle class. So that's very important. All right, so as always, the criteria, we look at profitability, valuations, liquidity and solvency, dividends, and the fundamentals of the sector slash industry. All right, so the first stock is Ping An Insurance, ticker symbol PNGAY, priced at $20.76, price to earnings of 10.16, price to book of 1.96, and a dividend of 3.54%. Okay, and this is an insurance company based in China. They offer insurance and other financial products. And, when wealth is being created and wealth is being generated, you're going to look to protect that wealth. Okay, we have HSBC, ticker symbol HSBC, priced at $25.15, price to earnings of 27.98, price to book of 0.54, and it pays no dividend. Okay, and this is a British based bank. However, the letters HSBC stand for the Hong Kong Shanghai Banking Company. Okay, so obviously it's a British based bank, but a significant portion of their earnings um, come from Hong Kong and mainland China. And this is a decent company to look, especially in an environment where they're considering delisting a lot of Chinese stocks. You may want to look at some of the international companies that have a lot of exposure. Okay, we have AIA Group, ticker symbol AAGIY, priced at 37.02, price to earnings of 16.65, price to book of 1.94, pays a dividend of 2.60%. And this company is another insurance company. This is a Hong Kong based insurance company, but obviously, they do a significant amount of business in mainland China. They offer insurance and other financial products. And like I said, this has been on fire, and it could go higher. We have a Manulife Financial, ticker symbol MFC, priced at $13.70, price to earnings of 7.93, price to book of 0.70, pays a dividend of 5.85%. Okay, this is very good valuation, I must say. This is a Canadian-based insurance company. However, they have a significant amount of business in the Asian region. Okay, this is definitely a good company to look at. Last but not least is China Life Insurance, ticker symbol LFC, priced at $9.90, price to earnings of 6.89, price to book of 1, and it pays a dividend of 5.19%. Okay, another Chinese life insurer that offers insurance as well as other financial products. A lot of the Chinese banks, obviously there are no Chinese banks listed on the New York Stock Exchange, but insurance, a lot of insurance companies offer a lot of financial products, banking products, investment, wealth management products, and so forth. So, definitely something to look into. All right, so here's my final thought. One of my main concerns, recently they passed a bill, to delist a lot of the Chinese companies from the U.S. exchanges, and it's going to make, as far as compliance for these companies, I guess many of their compliance requirements are going to change in order to list on their exchange. So you may want to consider, US based or international companies that have a significant amount of business, within the country, as a way to get that exposure. I think this is one of the best long-term opportunities right now. The financialization of China is going to be very huge, and a lot of these stocks have been moving. This Chinese markets have been moving, and when you think about it, it's still much cheaper than the U.S. market. So I really think people should, pay attention to it. All right, so I encourage you guys to stay tuned, like and share the videos, subscribe to the channel, follow me on Twitter. I have links below. For support my Patreon. Again, I have a link below. As I always say, peace to